Welcome to Canadian Mortgage Weekly. For today, we are joined with Joe Bladek for episode 17. This is awesome. We have a really great video for you today. So again, Joe is a mortgage professional in the Barrie Simcoe area, but serving all of Ontario. Joe has been in the industry for over 10 years, is extremely knowledgeable. Joe lives in Aurelia with his wife and two kids, so he's also a family man. And yeah, very passionate about mortgages. So it's always awesome to be on Canadian Mortgage Weekly with you, Joe. How are you doing this week?
I'm doing just great, Sam. Thank you for that wonderful introduction. It's always great to hear that. And yeah, family man, just trying to always be there around my family, but work also is very busy these days, and that's always tough. And balancing that these days with lockdown is really hard sometimes with working from home a lot these days because of lockdown, but it's been great. And thank you very much, Sam, for that wonderful introduction. And Sam Thompson is a mortgage agent. He's hosting our show today. Sam Thompson has been a mortgage agent now with Mega Mortgage for over a year, and joined us prior to lockdown, and has been through our shifting and recalibrating over these last 13, 14 months now. Sam, great to have you here. I know you're married originally from Ottawa and living in Barrie, so it's great to always work with you, serving Simcoe County together for everyone's mortgage needs. So welcome as well to the show.
Thank you. Yeah, it's definitely been an interesting, year introduction to the mortgage world. I'm sure it wasn't done quite the same as it's being done now before I started, but yeah, it's definitely been an interesting season with, like you're saying, work from home, um, you know, not having a go-to office. It's everything's the home office, and very happy we were able to secure a two-bedroom apartment so that the second bedroom can become a permanent office. So,
Oh, that's exciting. Glad to hear that. So,
mhm.
yeah, and it's always like working from home has its perks, and sometimes uh, it's good because you can unload that dishwasher or do some laundry
Mhm.
or check your mail or whatever you need to do during the day and get all that taken care of. But anyway, it's been the weather's kind of been nice outside, wouldn't you say? Like all this snow we've been getting.
I was gonna say it depends what your definition of nice is. If you like snow, then it is great weather. If you're ready for it to be gone, then you might not be as excited. But I think it makes it a little fun to look outside and see all of the snow. I mean, like we were saying before we hopped on the video, I very much like, going on hikes and advocate of the All Trails app. So I'm gonna have to get my snowshoes back out for this week if I want to get out of
Yeah.
the house.
Yeah, totally. Yeah, snowshoes and winter coats. And yeah, I was actually like yesterday, I was chatting about putting away the winter coats and winter boots. And the
Mhm.
good thing I didn't, because you never know. Like we have here, we have snow, and it could always come back and it's back with
Yeah.
us again.
Hmm. It's always the
Yeah.
contrast of April. I think it was a couple weeks ago with shorts and t-shirts, and then yesterday, yeah, I saw people are out with toques and mitts back out. So
That's awesome.
it's
Yeah.
funny.
Yeah, it is funny. And yeah, I walked to my mailbox yesterday before the snow came, the snow had melted by that point, but like it was still freezing. It was just,
Mm.
yeah, just absolutely freezing. I couldn't use my spring jacket. I had to. I should
Yeah.
have worn a hat, but I
Mm.
didn't. Anyway. Yeah. So looking forward to having this show today with you.
Mhm.
Maybe we can get right into the news section of our show and we can chat a little bit about what's going on in the mortgage industry as we usually do, wouldn't you say?
Absolutely, and it's definitely lots to talk about today. If any of you caught yesterday's video, you'll notice that the Bank of Canada had a rate announcement. Did they not, Joe?
They certainly did, yes. And I was really excited about that rate announcement, as I am with all things mortgages, but with this one specific because, up until yesterday, we've been hearing a lot of chatter across the news outlets that the Bank of Canada is keeping rates the same until 2023 because of coronavirus and the economy and how that was all going. But it was really awesome to see that rates are not going up and they're staying the same. And which is great news for anyone that has a variable rate mortgage or a home equity line of credit.
Right.
Yeah. And you know what else is good? They are still committing to keeping rates low and unchanged for the rest of this year. But they did come out with some news saying that because the economy has been doing so well, which is great news for everybody, that they might need to raise rates next year, 2022, rather than 2023. So that still gives everyone in a variable rate mortgage tons of time to either save on their interest or lock into a fixed rate mortgage if they feel that that is a better route for them.
Yeah, and that's definitely good news that we're starting to see the economy normalize a little bit or start to get sort of back on our feet. So it's definitely good news.
Yeah, it is good news. The economy is doing really well. The numbers that the Bank of Canada put out are saying that the GDP has really been increasing, which means that goods and services are still moving as they should. Obviously, small businesses have been really affected. Anyone that's been shut down from the coronavirus lockdown has been really affected, and I really feel for those businesses. However, overall, Canada on a country level is still really growing in terms of that. And when the economy really grows, the Bank of Canada needs to raise interest rates to stabilize everything. Yeah. But going into another part of what's been happening with the market, specifically with real estate, we remember last month in March, we would look at how many listings there were available for people to buy. And maybe most of the listings that were on realtor.ca were already sold. And maybe there was, say, for Barrie or Aurelia, a handful of listings to pick from. And I don't know about you, but I'm seeing even more for sale signs out there right now.
It seems like we talk about it a lot, that we notice, a bit more, and there definitely has been a lot. And I think a big change is that a lot of them are sticking around. It's not like you're saying as quick that the sign goes up and then almost right after there's a sold sign on top of that for sale sign listing. We're seeing that they're staying up for a little bit longer than they were, earlier in the spring.
Yeah, they have. Yeah. And that's not necessarily a bad thing. What we saw earlier in March, if you listed your property, you were pretty much guaranteed to get over list and sell it really quickly because there was just so little available. And once someone did list their property, it would be right away sold, and that would be a great way to offload a property. But now, with all the buyers seeing all this extra inventory showing up on the market, it's really giving them pause. And I'm noticing that a lot of buyers are sitting on the sidelines, waiting to see what other houses hit the market, because they're hitting the market so quickly, and there's so much more out there now that it's harder to make the choice for some people. Like myself, it'd be harder to make the choice, but for also some people, they want to see what they can get. So a lot of buyers that are pre-approved are waiting a little bit to see what happens with the housing. Is there going to be a better house that comes up? And a lot of buyers are waiting, can I get a price that is at list price instead of over list price? And we've been seeing a lot of offers come into our office showing now that they have financing conditions, offers that have home inspection conditions. We haven't seen that in months. So that is not a bad thing. That's a good market, a stable market, and a very balanced market. So For anyone that is looking to buy a house,
Mm-hmm.
it's getting to be much more balanced now, and it's not so competitive, and
Right.
we're not seeing those prices go 100 or 150,000 over list anymore. It's more closer to the list price, or maybe like plus or minus 1 or 2% at this point most of the time.
Right. Yeah. And that definitely helps to balance the market, because I know that a lot of buyers that, we've been working with over the last few months have found it very frustrating that, even when they go to approach, a realtor buyer agent, and they're now like, they have their qualified amount, but they're looking for homes that are almost 100,000 less so that they can expect for those overages. So it's definitely good to see that, those buyers now can actually get involved in the market, and they're not, sitting on the side watching houses go by for, well over the list price. So it's good to see that balancing out. And how do you think that that'll affect the market going forward? Because usually spring is quite busy. We had a very busy like winter into the spring, but do you think it'll still, continue at pace with being this busy?
You know what? That's a great question. And I wish we had a real estate agent on our show today to
Mhm.
chime in with that. But from our experience and from my experience, I would say uh, right now with lockdown pretty much across Ontario, we might see houses staying on the market for a little bit longer, just because there's not as many people out looking. A lot of people are probably sitting back in their homes, um, maybe waiting for lockdown to finish, because
Right.
we're only looking till the end of May. So I think what will happen is once the lockdown finishes, we might see another surge. All the
Mm.
listings that are out there get bought up, and then we might have another shortage of listings going into the summer.
Right.
And that's just what I'm thinking. Obviously, I'm not an expert on the real estate side as much as I am on the mortgage side, but
Hmm.
if any real estate agents are watching, feel free to send me a comment or an idea of what you think is going to happen. But that's what I think is going to happen. Once lockdown finishes, people might be more comfortable to get out there and look for
Right.
homes, because I find that the people that have listed their homes right now maybe are looking to cash out on the market that we've had, just seeing what's been going on. I've heard some real estate agents say to me that, you know what, my buyer listed for 600,000 expecting that they would get 750, but we're getting offers at 650, and we're rejecting all of them because we want our 7 to 750.
Right.
So yeah,
Hmm.
it's going to be interesting to see, but it's a balanced market, and that's always a good thing. So leading
Right.
into the summer, we'll just have to see what happens.
Hmm.
Yeah. And maybe with that, see what happens. That's a lot of what people say when they are getting divorced and separated.
Hmm.
Let's just see what happens, right?
Right.
And that kind of, I want to segue into our presentation today, Sam, and that
Hmm.
is all about, what happens when a couple or like a partnership breakdown happens. And Sam, we have a presentation ready for that, don't we?
We do. Yes. It'll be really good to go over the numbers, because you don't want to see it, but I think over 2020 there was quite a number of separations or divorces that happened, and a lot of people don't know, what that entails, what to expect in terms of, what happens with their house and their mortgage, and how all that finances work out. So we do have a really great presentation for you guys today. Yeah, covering off all of that information.
Yeah, yeah, and thanks, Sam. This presentation is for anyone that is in the boat that they might be thinking about this or currently in this, but mainly just so it can prepare you if you are thinking about it.
Mhm.
And hopefully that this presentation is useful. And I know this is not a very exciting topic, but it's a topic that, clients will call me or you, Sam, and just find out, where this is happening and what are my options. And that's the biggest question we get, is what are my options and what can I do? And the most important thing that I would say is, it's really good to have the numbers ready before you pull the trigger on anything.
Mhm.
Yeah. So what I'll do right now, Sam, is I'm just going to open up my presentation and just make sure you can see that there. Can you see the open the
Yep,
PowerPoint there?
looks good.
I'm just waiting for it to show up there. Okay. Okay.
There we go.
So as we are waiting for my PowerPoint to load correctly, for whatever reason, it's blinking on my screen. There we are. Oh, it's blinking again. Okay, there we are. We want to go into what happens when you divorce or separate from a relationship or partnership after you've bought a house together.
Mm-hmm.
And as I said, it's not a very exciting topic, but it's always good to know what your options are. Whoops. There we go. Okay, so what are my options? Let's see here. I don't know why this is not working for me, but so what are my options? So what happens to my mortgage? When you have a mortgage together as a couple, a lot of things are in the balance. And when you are separating, typically what happens with a couple or a partnership is the assets need to be split. And when the assets are split, typically what happens is there's an agreement. And with that agreement, the bank then can know, and the mortgage broker that's working for you knows what to do, because otherwise it can be all up in the air. And from there, the mortgage likely needs to be broken so that the assets can be split and everything can be sorted out properly. And that's never really a fun conversation, because when the mortgage does need to be broken, there is quite a penalty involved with that. But it's not something that you could ever foresee happening, because no one really gets into a relationship wanting to split up anyway.
Right, right.
Right, Sam?
Mm-hmm. Yeah, and
Okay.
definitely the agreement is a very important part, because as you're saying, it communicates to us, where all the finances are at, where they're going, and it's really crucial for the lender to have that document.
Mm-hmm. Absolutely. So things to do before getting a mortgage, and something that the lender will absolutely need to see, is to work out a separation agreement. It doesn't have to be necessarily finalized, but just to have an idea on paper what you're going to separate and how it will separate. And this could be done by yourself. There are separation agreements available online that you can download and follow through. I mean, that's not really recommended, but
Yeah.
the banks will accept that. However, we recommend strongly that you work with either a divorce mediator or a family law lawyer to work through all the different aspects of what will need to be separated. And the reason why this is so important is because if you separate from your partner and then buy another home without that signed separation agreement, your ex-partner still has ownership rights over your new home if that separation agreement is not signed. So that poses a big risk to the lender or the bank, and even more so, a bigger risk to you, because now you've bought this new home thinking, okay, I've separated, everything is great, I got my new home. But really, it's still a matrimonial home, and that asset will also need to be split if it's done before a separation agreement is agreed upon. Moving on to the next slide, what options do you have when you are separating with your home? And those options include, you can either buy out your partner and keep the house yourself, and your partner gets off the title. And usually that's a buyout, giving them a chunk of change. Or second would be, you have your partner buy you out, they keep the home, and you take the change or the payout, and you move out and you move on with your life, either buy a new place or rent a place. Or the third option would be that you both agree to sell the home and split the proceeds however way you've decided on your separation agreement, right? It's unfortunate, but those are the main three options that we typically see. And that's why it's really important to have that agreement up in place, at least a working copy of that.
Mm-hmm.
And Sam, there are other aspects of this that couples would need to look at too, right? Ownership of vehicles,
Right.
splitting the debt that they have,
Mm-hmm.
who is responsible for what,
Mm-hmm.
you know, other assets like boats, trailers, all that as well.
Mm-hmm. Yeah, and that's another reasoning of why the agreement is also very important, is because that can also be one of the more timely, pieces of documents that we actually need to move forward, because you're looking at so many assets being split, and it is very case to case of if one partner is willing to buy out the other versus it's really dependent on
Yeah.
sort of how amicable the separation is and the cooperation between them.
Yeah, you bet. Absolutely.
Mm-hmm.
So those are some options there that you would have with your home. Now you might be thinking, okay, who do I talk to work out this agreement? Who do I talk to? Who do I need to work with during this whole time? So with that, we have this slide here. And what I wanted to just throw out to everybody is, before you actually speak with a lawyer and a mortgage broker, perhaps the first step could be counseling or a therapist.
Mm-hmm.
And perhaps there is a solution that can be worked out that is outside of separating.
Mm-hmm.
This would allow you to work things out and could be significantly cheaper, as you know, Sam, than
Mm-hmm.
going through the whole process, and would allow you also to maintain the same lifestyle, which for a lot
Right.
of people is very important.
Mm-hmm.
Yeah.
Mm-hmm.
But if that option has already been explored or is not really a valid option in the eyes of both of you, then moving on to working with a divorce mediator or a family law lawyer, they would then be able to sit down with you, go through all your assets, let you know your rights, and also show the costs involved with a divorce or a separation, which are really really can be astronomical at times if you're working with a lawyer, because it all depends on how much time you're using the lawyer for and how much paperwork they're assigning towards you. That's why it's a good idea to have an idea of a simple and drawn out separation agreement before you actually speak to anybody, so you have an idea of where to go with that.
Right. Mm-hmm.
And then once you have an idea of how you will separate your assets, then it's a good time to then talk to a mortgage broker, agent, specialist, which we can then provide you with an idea of how much you qualify for your financing and show you the options available.
Mm-hmm. Yeah.
Yeah. Now, Sam, I know a lot of times that someone will come to us first before even going ahead with a separation agreement.
Mm-hmm.
And that is okay too. It's just we can't really act on anything until we have that agreement. But what we can do is we can provide that person an idea of what they would qualify for if they were on their own. Sometimes that number is much lower than they think it should be.
Mm-hmm.
And that is an eye-opening experience, which can then, that information can be used to help you make your decision before you pull any triggers on that.
Mm-hmm. Absolutely. I think that's the most common, at least that I've seen, is that's sort of their first step, which is definitely, like you're saying, something we can do to give you an idea of what you qualify for. But again, definitely chatting with a lawyer or divorce mediator will help you, because they can also provide you with that independent legal advice, whereas we're more financial advising of what you can qualify for in a home. But it's more preferred that you get legal advice from a mediator or from that family law lawyer.
That's right. Great, great slide there. And before we move on, what fees should someone consider, right? What are the
Mm-hmm.
costs? So let me go into that next here. So here are some typical fees and charges that are involved when we go through a divorce file or a separation file. Obviously, if you're going to see a counselor and therapist and that doesn't work, then there are those fees that are either covered by your work insurance or paid up front. You know, worthwhile investment in my opinion, because it can help smooth things over and create a solution outside of separating. However, that's not the case. Then typically we see a mortgage penalty on the current mortgage because we actually have to remove title off that mortgage. And a lot of the times by removing the one person, the remaining person does not qualify, and we need to switch lenders.
Mhm.
There's also family law fees from working with a family law lawyer or a divorce mediator, mediation fees, which mediators are a lot more cost effective than a lawyer and just as authoritative and can get the job done quite similarly. So if anyone's looking at a divorce mediator or a family law lawyer, we can recommend some that we've worked with in the past. Then we have a real estate lawyer as well, because the family law lawyer can advise on the divorce separation side, but then we need a real estate lawyer actually to transact the title change, the mortgage change, perhaps you're selling the home together, whatever you need to do. There's a real estate lawyer involved. And then obviously appraisal fees, because an appraisal needs to happen as of the day of separation. And Sam, as you know, that's always the first person people will see is, you know, the appraiser coming into their home, and that's like just a sign of value to the home, so we know how to split the value up that one.
Yeah, it's a really important step because likely that's going to be, you know, the biggest asset that's shared between the two of you. So it also gives us a really great starting point if that appraisal was done and we know, you know, the value of home that we're working with.
Yeah, absolutely. So we've made a case study for all of you watching, which we're going to jump into right now. And Sam, you have worked on a few cases as well. So let's jump into this. And you've created this case study here for Jack and Jill. Names have been hidden for privacy, of course. However, looking at this case study, you can see Jack and Jill. They were together. They ended up buying a home in 2017, paid $450,000. Together, they have an income of $150,000. That would be a nice income, eh, Sam?
450, that's
right. Locked into a fixed rate, 5-year term. Obviously, there's going to be quite a penalty. They were able to put 10% down at the time, currently making payments of $2,134. So there's a typical scenario. And unfortunately, with coronavirus and a lot of people working from home, we're seeing a lot of people split up. So I'm really hoping that this information can shed some light on that process for you all. But then let's see how this all breaks down. So on a separation breakdown there, the house is now being appraised for much higher. So just over 500,000 based on the 3% appreciation. Mind you, we've seen over 30% appreciation here in Simcoe County, Sam, so it could be a lot higher.
That's right.
And then this has been done by an appraisal, and the appraisal fee, just so all you know, that's an upfront fee, and that is usually around $450. The remaining balance of the mortgage at the time is $397,918, and then we have the penalty to break that mortgage. And then on top of that, we have $2,000 assigned for each individual for the real estate lawyer, because they need to use separate lawyers as well. As everything starts to get separated, they start to use separate lawyers. As you see, all of a sudden, the legal fees on the real estate side are double than what they usually are. So this now leaves Jack and Jill with $49,000 each after the sale of their home, paying out their mortgage, penalty, and legal disbursements. So this may seem like a good chunk of change. Jack probably thinks, oh yeah, I'll be able to buy my own $500,000 house.
Mhm.
Jill's probably thinking I'm going to buy my own $500,000 house, and this is all going to be fantastic.
Right.
Yeah. However, that's not the case, isn't it, Sam?
No, in a lot of the cases, it doesn't necessarily work out that way because the 49,000 figure, at least for this couple, it does go far, but also there's a lot of extra fees that are counted into, getting a secondary home.
Yeah. So just moving on to that, we have here the separation illustration. So each party has their own income. They have their proceeds from the sale, but they also had some debt that they had to pay out. So that brings down the amount they have for down payment, which is, the debts most of the time, to be able to qualify for your max amount, right, Sam? You need to pay out pretty much virtually all your debt, including car loans and credit cards. So based on your specific scenario, you may have more or less left over.
Mm-hmm.
But as you see here, if you fall in one of these categories, you can see just how much less home you can buy versus what Jack and Jill sold for together.
Right.
Yeah. So unfortunate, but typically we see them downsizing after a
Mm-hmm.
separation.
Absolutely, because like you're saying, a lot of the times the debts need to be paid out, to qualify for the highest. And typically, if you're going through a separation, you don't have those additional savings to pay out all of those debts. So a lot of the money you receive, from the proceeds of the sale of your previous home, we do see those typically get eaten up a bit by, paying down some of those debts before they qualify for their new home.
Yeah. But there are some options though, right, Sam, that people can explore to afford back up to that amount.
Yeah.
So let's go into that here next here. So qualifying after a separation, as we mentioned, it's a lot lower after the separation and clients need to downsize, but there is a bright side. If they do have a co-signer, then they can get a higher priced home. And sometimes what we see is a parent will co-sign at that point.
Mm-hmm.
A retired parent maybe has a little bit of income and they can add to the file.
Mm-hmm.
Perhaps another family member. And something that we've seen as well is sometimes husband and wife split apart, but they co-sign on each other's mortgages still going forward.
Mm.
And that is a really interesting thing that I've seen in the past. And it all depends on your, like you were saying,
Right.
Sam, amicable level and how cooperative the other ex-spouse is. But that doesn't really happen. But in cases where it's just was a mutual decision, sometimes they co-sign for each other's mortgages so they can still afford the same lifestyle. And if you are in this situation, and I need to throw this in there, and you also need to pay support payments on top of, the debts you've paid out, then whatever amount you will qualify for, even still, will be much, much less. Because if you're paying support payments of $600 or $700 per month, then that is counted as a liability and looks just as a car loan or a truck loan would, because of the amount that you're obligated to pay for each month. So it's always good to be able to do a buyout so you don't have to do any support payments. So it's all at the front end. So it never affects any of your borrowing power going forward.
Yeah, that's very important to note. And that's another, again, another sort of documentation that, we would need early on in the process if there is going to be any of those payments being made. It's good to have that figure up front so that we can, again, give you an accurate, number of what you'd qualify for.
You bet. Awesome. So a lot of questions we also get is, how long does the entire process take? And with that in mind, there's typically about as little as 2 months we can get that done. And With the 2 months, that gives us time to find a lender, secure the rate, sign the paperwork, get the lawyers to sign off on everything, and it's done. However, Sam, it can go longer, as you know, depending on the cooperation. It could go on for years and years, depending on the cooperation, and perhaps there's still also it all depends when the agreement is reached, really.
Yeah. That's right. It's getting both parties satisfied with the separation, getting it signed, and getting, everything moving forward.
Yeah. So what complications can arise in the situation where we're going through this? So one of the delays can be on your end, the client. Maybe we've asked you for all the documents that we need, but you're taking a long time to get them to us. That would delay things because we really can't start anything until we have that documentation. That would be primarily the separation agreement along with your income documentation. Another thing that could delay things is, once we have everything sorted and the house is appraised, then the appraisal comes back lower. Or perhaps the house is sold for lower and we have less to work with. That could delay things or complicate things as we need to redo all the figures for you. Also, we've seen ex-spouses last minute come to want to renegotiate everything, and that could then delay everything because we need to restart everything over again. And that happens very rarely because once a separation agreement is reached, if you're working with a lawyer or a divorce mediator, it's usually everything has gone through very nicely. And then there's also the part about additional legal fees. So as much as you want to make sure everything is correct in your separation agreement, those legal fees can certainly add up. And then all of a sudden you're left with a large legal bill, and maybe that can eat into your down payment of your new property.
That's right.
Anyway, so just what are the next steps? If you're in this situation, we want you to get in touch with us, either Sam or Terry Lynn at the office, or myself, Joe Bladek. We can sit down with you to schedule a private phone conversation or video consultation. We can go through what your options are together, show exactly what you could afford on the other end based on what numbers we have. And you can reach us by calling our office or emailing directly. So yeah, it's a very, Sam, it's a very hard topic to go into, isn't it?
It is, but we're seeing it, become more common, and it's good to know, as you were saying, all of the costs involved, all of the steps in the process, because as our one slide was saying, if it hasn't already been, an option that's explored, it does give food for thought for, couples therapy or, having some sort of counseling for that, as a first, a starting position, and then moving from there. But I think there's a lot of great information in the slide and in the video. So if you guys have any questions, please feel free to reach out to our office or even comment on this video, or direct message us on the social media as well.
Awesome. Thanks very much, Sam. Thanks for hosting today's show, and thank you everyone watching. I'm just wanting to make sure if there's any questions that you would like to post in the comment section that we can get to them. I don't know if there are any, Sam, because this is a very private topic for a lot of folks. So it's not like anyone's going to go out there and comment, hey, I'm going through this right now. What's my option there? But yeah, give us a shout and we can sit down with you privately to make sure that we go over those options together. So that is it for that topic. Join us next week on Canadian Mortgage Weekly. Sam Thompson will be hosting again. I will most likely not be around, so Sam will be able to take the show on his own. And stay tuned. That will be episode 18. And we're looking forward to seeing you all there. Thanks a lot for joining us today, Sam.
Yeah, thank you for having me. It'll be It was a great episode this week, and definitely will be a great one next week. We're likely going to go over some first-time buyer topics. Now that we're seeing the market, balance out a bit, it'll be exciting to go through some of that with everyone next week.
Yeah, that would be great, Sam. You're a good expert in that area, so please join in. Sam's got some great information lined up and ready to go for you all first-time home buyers. And yeah, we'll see you then, and have yourselves all a great day.